Hi, welcome to today's session. Can the guys on Zoom hear me? Okay, we're just having some technical difficulties showing the app, showing this live stream on the app. But I think we can just go ahead with today's session. All right, thank you. Yeah, welcome to today's session. Today we'll be looking at global CPI. I think that is something that is very important. A metric that has been monitored quite a bit over many of the headlines. So we're going to look at how inflation is running this time around as compared to previous years. And as always, we're going to use some of these new AI tools that are widely available for everyone. And I'll show you guys how you can actually run some quick analysis on these AI platforms to get all of this data into one place and do your analysis. And then we will look at some of the instruments that might be affected by the CPI. Right, my name is Shuman, and I'm an FX strategist. I specialize in technical analysis. Okay, so my email is here. If you have any questions, feel free to email me. And at the end of it, I'll put the official Vantage email as well, so you can actually use that email to contact if you have any questions. Okay, a quick disclaimer, trading any forms of derivatives carries significant risk. Do ensure you fully understand the risk before making any trading decisions. Always start off your own demo account first before moving on to your live accounts. All right, okay, so the first tool that we're going to use Gemini. So Gemini is an AI tool that is created by Google. So if you go down to Gemini, you prompt it with a specific query on global CPI, you'll be able to generate a report like this. We're just going to quickly go through some of the key highlights. Gemini is going to do the search across multiple websites, rate the credibility of those websites, and then it will use this very beautiful Plotly dash to create this nice infographic. All right, so key headline is that since 2019, the cumulative price increase in the OECD area, right? Most of the developed countries, you can see over the last 6 years, prices have overall increased by 33.7% cumulatively. And of course, there are certain countries like Argentina and Turkey, which are experiencing high amounts of inflation year on year. Okay, but what we are more concerned about is that the United States inflation rate has decreased all the way back down to 2.4. Okay, Euro area, that's around less than 2%. And in general, the 2% level is the healthy rate of inflation for a healthy economy. Okay, so we are roughly around the area. So inflation can be considered under control. Okay, the sticky core problem when you're looking at the core CPI that includes your food and energy, right? Okay, you can see that it is roughly about 0.7 points higher than your headline inflation. Okay, in the euro area as well, food and energy is slightly higher, growing at a faster rate than your headline inflation. Okay. So a few things that are pushing up your prices, supply chain strain. So one key aspect of your supply chain is the transportation routes in via the Middle East. There is a conflict. There are conflicts happening regularly around the area, but more importantly, or more recently, it is the conflict between the Houthis, Israelis, as well as the Iranians, right? So they control some of the main shipping routes through the Red Sea, one of the most vital routes to for supplies to move from the east side, East Asia, all the way to Europe and vice versa. Okay, so tight labor markets as well. You have high job vacancies as compared to unemployment, and then you have sustaining strong wage growth, pushing up prices in labor-intensive services. And then you also have energy and climate volatility, which when you look at the price of energy, especially oil, which is still the primary source of energy for many countries across the world, that basically you saw a 40% cumulative increase since December of 2019. Okay, so whenever CPI is controlled, usually you see the central banks reduce rates, right, to stimulate the economy. But in the case of the US, it is still holding the 4.5% interest rates. For the Bank of England, 4.25, and for ECB, it's down to 2%. And Japan, in most recent months, have increased from a negative interest rate to a positive 0.5 points interest rates. Okay, so if you have high inflation, you would want to have a strong currency so that imports will be cheaper. But if you have low inflation rate, then essentially you want to have a lower or weaker currency so that your exports, which is a major component of your GDP, can be increased by having other countries buying more goods and services from your country. Okay, so that's kind of like the generic economics 101. Okay, so what are we looking out for in 2025? The key thing here is that you do not want to have high inflation while wages are maintained at or wages growth maintained at a slower rate. So essentially, you're looking at the global inflation forecast by the IMF, which is the International Monetary Fund, right? So essentially, if growth is slower than growing at a slower rate than the inflation, then you end up in an economy that is what they call a stagflation. So when stagflation happens, that means prices increase, whereas your wage growth maintains or decrease, then you find that it is every single dollar, the value of every single dollar is going down, and you find that the same amount of money is buying lesser goods and services. In that scenario, then people will not want to spend, right? And then it becomes a vicious cycle, and this will lead to a recession where basically businesses are not able to have the demand that they need to actually sustain a business, and they go out of business, and then the economy spirals down into a recession. Okay, so this is Gemini, so you get a lot of details from here. There is the essentially the original report that you get together with this infographic. So the other one that I kind of like to use is the Perplexity AI, which is what they're trying to do is trying to replace Google search. So apparently they have a very comprehensive research tool. So same thing, you can look at today's kind of global CPI spotlight. It shows you the steps, it shows you the sources, right? Just to make sure that all of this from reliable sources. But overall, you can see the inflation trends since 2022, where we were seeing 8 to 10% year-on-year inflation, right? Dropping down to somewhat of a healthier level at 2%. Okay. The bad thing about Perplexity is that it gives you lots of words and doesn't present to you in a very nice infographic. So if you guys are interested, do check them out. You can get quite a lot of information in terms of how I would say this report is pretty standard, and to a point where like this is quite a a good report to give you a quick rundown on what is the scenario for global CPI. Okay, so same thing, they're looking at inflation remain elevated through 2025. Okay, and then the challenges would still be wage growth, housing costs, right? And then global political tensions in the Middle East as well as in the US. I would say climate-related supply shocks, this is something that is quite debatable. Okay. And then, of course, structural changes in global supply chains. This is kind of debatable as well because in most cases, costs of supply chains should decrease with improvements of technology, but due to the conflict, due to certain geopolitical tensions, I think that is the key reason why you see an increase in costs. Okay, so nonetheless, it's a very complex subject. Not we can't actually discuss everything about global inflation in a particular webinar. I think more importantly, we're going to look at some of the instruments that will be affected by global inflation. Okay, but just note that the US, I think there'll be a PPI announced later, so that is something that we're going to watch out for. All right, meanwhile, let's look at some of these key things. I think the first one that we're going to look at is the DXY, the dollar index. And as always, we're going to do a quick analysis on this particular instrument, which measures the strength of the US dollar against a basket of currencies, with 60% of it made up by the euro. Okay, so key thing here, we have the downward trend. I've placed the pivot points on the charts. So we started off M2 pivot. We are looking to hit downwards. Why? Because of the bias that we see in April, where the dollar fell below S2. And again, this is the monthly pivot. So we're looking at the monthly time frame with the daily candlesticks. Okay, so just note whenever you break below this S2, okay, the M1 S2 immediately becomes a very strong level of resistance. Okay, so we're going to see some reaction on the upcoming news. I think by PPI MOM, you have, okay, this is for your production, okay, whether or not it's increasing. Okay, but back to your DXY, anything, whenever you fall below S2, this becomes an immediate resistance. Okay, if a support is broken, it forms a flip zone into a resistance. If a resistance is broken, it forms a supply on the flip zone. Okay, so this was kind of like the downward channel that we're looking for. M3 was where we were looking to sell off, and this was caused by CPI. Okay, this is CPI news. Right, CPI news broke above, giving us this convincing break. So our target will probably be around this level. And of course, if we can get up into the 101th level, that is something that we'll be looking up for. Okay, so here and then upwards before we look for a double bottom. Okay, so we were bearish on US dollar for the longest period of time. Okay, the target was actually this, like this. Okay, for the middle of the month, 14th of July, 15, we are looking for that reversal back down. And then you have a major catalyst, a major news that break it above. So this is where we are looking to buy up. Okay, as we go along, if you have any symbols or any questions, feel free to let me know, then we can actually go through them. Okay, I guess I do not need to talk about the pivot points. Okay, you have key resistance lines and support lines that are being calculated based upon your previous period's key points, the high, the low, and the close. And in this case, because you have your close and your low on that same day, okay, we were basically looking for a sell-off, right? A retracement and then a sell-off, but that catalyst pushes it above M3. So we are basically very bullish in the short term for the dollar. Okay, let's quickly look at gold on the monthly time frame. Okay. So gold has been in this awkward triangle where your buyers and your sellers are not really making a big move to either side. So we are expecting such a continuation until a breakout of this triangle happens. Okay. So you're gonna get some really big impact news soon in about 12 minutes. But essentially, we're trying to look at this sort of pattern, and then any of this breakout, we will be looking to. And in fact, because of the strength in dollar, okay, if we go down to that low time frame, then you can see that there's actually quite a bit of space down to S1. So hopefully with this PPI, we can get to S1 and then recalibrate upwards to 3,400. Okay. Again, this is the weekly pivot. We are in the middle of the week. If we want to get up to R2 and 4, the best bet that we have is to give a strong push, okay, get more buyers at a lower rate, and immediately by the end of today, bounce back up above M2, and then we head towards the weekly pivot. Okay, otherwise, we will be ranging around M3 and M2. But anything below this to M1, S2, then we'll be looking for a big sell next week. Okay, looking at the daily, okay, this is kind of like the weekly plan. If we break towards the weekly target, okay, let's just highlight this area. Okay, this area here. Okay. This is our weekly target. If we do in fact get down into this area, next week would be a sell week for XAUSD. It sits below the M1S2, which sets things up if we do want to get into this area. This at minimum will be M1S2 today to give us the M1S2 into the weekly target tomorrow. Right, and when we look at this move to the upside, okay, you can see how that reaction happens. R2 and 4, same thing on that daily. R2 and 4 is going to react, okay, because you have this range in which we were trading on Thursday last week. Friday broke above this level. On the Monday, where were we looking for? We were looking for this as the support, and hitting this support should push price above that previous high. It failed to do that previous high, so we are in that downtrend right now. And you can almost see that this was the trend line that has been formed. So ideally, if we can get up to M3 before that sell-off, that would be great. And this news event might be the news event that we'll be looking for. Okay, yesterday's CPI was a push to the upside before falling off. So where would you look for? The weakest point on the 15 minutes is actually this level here, because this was where the buyers were. In fact, they pushed it up here. Let's look at the 5 minutes. Okay. You can see this blue 5 minutes candle. That was where that last group of buyers came in. before they were swept out. So this would potentially be a weak zone for buyers. That means if we do get in fact get up into this area, okay, you will not see a lot of buyers pushing it above this level, okay, because of this failure here, and it has been what is an untapped zone, so we can look for a reaction of this level. Okay, so up to this level, react to this level, and then downwards. Okay, always sell off on that lower high. Do not sell off at the higher. Okay, so that's something we can look for gold. Oh, oh, let me just change the screen. So I was on a Windows capture instead of a display capture. So I think I wasn't sure the chart. Okay. So again, for those who missed this, we are looking at this sell-off here, this blue candle here. This green zone here is the New York session last night. Okay, so 8 o'clock, 9:30 was the opening. Okay, the news was somewhere around here. Okay, this was the news. 8:30, and then sell off, came back off, and then as it comes down to this level, you can see this blue candle here, which is where the buyers were looking to line up to push it up, and then it failed, giving rise to this point of failure and also overlapping with our M3. Right. So potentially you want to look to a push to the upside. This is 10 points. So on the low time frame, where will you consider a buy? Because if that is the high probability sell, where will we be looking for the buys? We will be looking for that failure this morning. Okay, so you can see this downward move, and then as it pushes up into this area, okay, this was a triggering of that stop loss. Okay, shoot it up into this area. Okay, so I would say this has already been taken. If this cannot create a higher high, this is actually a weak order block. Then we'll be looking at this area here. Okay, so if it dips into this area and it makes a higher low, that is where it's going to, we'll be looking to buy up. Okay, this is the freshest point of failure. Why? Because you have, this was the end of New York low last night, New York PM. Early morning, it tapped into this white color bar here. So this has been taken. And as it comes back up, it failed this level, pushes to the upside, and then this becomes a empty zone, which again was taken in about 2 hours, right? And then this is the new push above. And so this is the new area that has been untouched. And if we want to sell off, then this would be the key area that we'll be looking to sell off. So potentially hitting down to this area here. I'll say 2326 to make it 2347. Okay. So this area here, and then we slowly make our way up. And then by 9:30 or 10:30, we sell off from there. So getting a little bit more precise in terms of your entries, we want to look at point of failures. Okay, so this was where the sellers were selling, retrace, selling, retrace, selling, retrace, selling with this white candle with printed as evidence that sellers came in and then they were wiped out, right? So this is going to be, if you're going to buy, you can put your stop loss anywhere below this bar here, and you will not find any sellers to actually trigger your sell stops. Right? Yeah, we can do Nasdaq or S&P 500. Okay, S&P 500 again, all-time high since that tariffs happening in April. Okay, February was that retracement, and then the actual thing or the actual move was actually in April, right? So that was the actual tariffs being announced. So where do we go from here? Okay, so all-time high here. If we want to make this a support, we want to ideally see a 1:1 movement. Okay, so let's mark this thing out. I'm going to remove the pivot points for now. Okay, you mark this point out, okay, and you want this to be the 50% or the equilibrium for the move to the upside. So from here, you want to overlap this. So unless we see a move to 6384, we are continuing this move to the upside with our equilibrium at 6,148. Okay, otherwise, if it falls back down to this level, this is probably not going to be a strong support, and we are going to see at least this head forming, and then maybe the shoulder forming before moving to the downside. Okay, what do we look for in the lower time frames? Okay, 50 minutes candle, you have last night pushing all the way up to the all-time high before selling off. I think this was an announcement. Something didn't get passed. Some crypto related news didn't get passed, right? So right now we're forming into this range. So if you consider this as a sweep, in which it is a sweep, then this is going to be our best bet. And for us to actually go down, we must first hit up to this level here, clear it, and then down again. So just probably going to play around the range, see if you can find any sweeps. This is probably one of it at this London time. Okay. Or you might see another sweep again back to the best price before moving to the upside. Okay, overall, it's still bullish until we fall below. Yeah, so 5 minutes, something interesting for you to see is this level here. So this is the point of failure. You have that support coming in and then they broke. So this is going to act as a midterm resistance. And then if you break it up, then the target will be this high. Again, if you remove all of this, okay, then you will see that where the 50% is. That 50% is exactly at this break. So move down, break, and then 50% is going to give us an indication. It can either move down further, giving us the start of the downward trend, or it might do a breakout, retest, and then our target will be here. Okay, so this breakout is going to give us the confirmation. Okay, so wait for the confirmation before setting up positions in. Right, so we have news coming in. News, PPI 0. Whoa. Okay, so inflation is well under control, right? In terms of as far as the data shows. Okay. So you'll probably not see the dollar weakening. Okay, so was this news induced? Okay, the news came out, it was high and then it shot down. Did not break any of these lows. Okay, this low here. So I would say once it moves above, then it's the resume to the upside. Okay, so gold is showing some movement as well. We broke this. probably gonna hit down lower into this level here. Okay, then we're gonna watch for some reaction here. Again, if it's weak, then we're probably going to go further down. But otherwise, as it makes a higher low, that's where we are. You can see the spreads widening, so it's best not to trade during this volatile times. Make sure that when you're trading, your spreads are thin, okay? Your bid and ask are thin, like this, yeah. So you can see that it's hovering up and down about 1 pip, 10 pips. All right, cool. So that's all I have for you guys. Let's see, what's the other page? Hmm. Okay, so do explore some of these tools. I think they're getting better and better. So definitely going to be a great aid to your analysis when you're trading. All right, with that, actually there is the deposit bonus for those of you who are new here. You get up to $500 credit for your first deposit and then 10% on your subsequent deposits. All right, with that, yeah, that's all I have for you guys. So this website, this link here, vantagemarkets.com/academy/live will be where you see all your past, all of these webinars that we have been conducting for the previous month, I think. Right, it takes about a month for us to actually upload previous month's videos. And if you have any questions, feel free to reach out to support@vantagemarkets.com. And with that, all the best to trading the New York session, and I'll see you guys again tomorrow.